So with that, I'm going to take it as an opportunity to start. My promises will be out at 5 minutes to the hour. There are going to be two stages and phases where I switch off the presentation and we go into a discussion. Because what really matters over here is the unusual approach we take to building a business and what I'll be sharing with you that we see working in the world today. Please take advantage of ensuring that I communicate clearly, that you grasp the notion, the idea, and take from it what you believe will work for you. So I'm going to try and make it an open forum because webinars are dreadful and horrible. Nobody likes them, especially me. And I'd far rather have good conversations. Matthias, darling brew, haven't had the benefit of tasting your beverages yet, but what a lovely story behind the business. So always keen to hear more around that. And Chris, yeah, the world of equipment rentals. You're a bank more than a business. And I wonder how many people realize that between all the equipment you have to have and the debtors books that you have to run, it makes it a really, really interesting challenge in today's world.
Yeah, fortunately, 10 years of my life I spent in banking. So
there we go. So it's paid off.
It is only the product that differs. The processes is very much similar.
Yeah. And then Philippa, I'm also very keen to hear about how moms are international. They're all over the place. And the hole that you plug over there for Recruit My Mom is really interesting. We have an early stage client in the UK, which is where I currently am at the moment. I'm busy traveling on business, that specializes in Recruit My Spouse. And in effect, what she does is she works with predominantly American military personnel who are located right around the world, whose spouses, whether they be the husbands, partners, or wives, are all quite capable and able. And I think it'll be a really good opportunity for the two of you to connect, hook up, network with each other. There might be some really, really nice fits over there.
Thanks, Pablo.
Ladies and gentlemen, without further ado, we're going to get cracking. There's quite a bit of content to get through. There will be two phases where I'm going to switch off and go into discussion in order to just make sure that we're all aligned and to take on some of the questions and debate a few issues. My big ask would be, in order to make this a rich, wonderful engagement, please, can we put our cameras on? What you do, what you say, if I see the whites of your eyes, or if you turn pale suddenly, it gives me an opportunity to really be more relevant to you. And it would be very, very appreciated. There's nothing to be shy about. You know, we've had years and years of having to look at ourselves. And no doubt, all of us, like me, wish we had more hair. But we don't. Unless you're Stephen Whaley, and you've got the right genes to carry you through, Stephen. But not all of us do. So with that, my name is Pablo Fatidis. I'm one of the co-founders of Aurik. The background matters because it informs how we look at the world and what we do and what we talk about. I come from two turnarounds in my very, very early stages. Effectively, a turnaround is where you buy a business for $1, you take on the debt, and through youth, stupidity, absolute persistence, luckily both those businesses turned around and yielded some good outcomes. After that, I went into mergers and acquisitions, where after learning the operating methods in a business, mergers and acquisitions is where you develop the investor mindset behind a business. What makes a business scale? What makes it sellable? What makes it earn a premium valuation? What do those levers look like? And then finally, after that, I got hauled into a family business. Just by show of hands, are there any family businesses on screen? Yeah, okay, quite a few. You know, they're really interesting because you have the experience and wisdom of the old line, and you have the energy and innovativeness of the young line. And typically, old lines and young lines don't work well together. And when they don't, nobody wins. So how you get family businesses to operate effectively, to carry the value of experience, and yet the reinvention of fresh energy is vital. I also think that succession as a theme is going to grow globally for the simple fact that the majority of businesses that are established sit in the hands of the baby boomer generation. They're going to be looking to exit between now and 2030, more or less. And the potential buyers out there are getting fewer and fewer and fewer every day. So the likelihood of exiting by passing on the business to your leadership tier is going to be an important feature of the future. We'll talk a little bit around that. And then after that, as a co-founder of Aurik, Corinne Engelbrecht and myself, having started the business now 15 years ago, 16 years ago, started by building and selling 12 companies. We had 2 failures in a 9-year period of time. We had 2 listings on the stock exchange, 3 management buyouts, and 5 sales to corporate South Africa. And what was interesting about that is we noticed a methodology around how you build the commercial systems in a business that enable a business to be scalable. Scale simply means you can put your time and attention on growth as opposed to your time and attention on monthly, daily, weekly operational activities so that you can focus on growth. And it was through that we introduced it into Aurik. And where we sit today is we have offices across Southern Africa, recently having opened in Namibia, moving towards a year there. We had a fantastic in-person event in Namibia quite recently. We're in Northern Europe out of the Netherlands, we're in the United Kingdom, and we're in the States through Chicago. And we've had the benefit and privilege and opportunity to work across many, many different business owners. So the positions I'll be sharing with you today come from that body of work. We're going to talk to the problem and solution around growth. We'll take a look into the future, 3 to 5 year view of what should be on the cards. There'll be a small invitation, and as mentioned, I will have you out by 5 minutes to the hour. With that, I'm going to start with an analogy that's really powerful, and it's an analogy that I think carries a lot of value because it simplifies things dramatically. You know, growing a business is like sailing a ship. If you think about it, a ship needs to have a destination. If you don't have a destination, you can't track where you are out at sea. If you don't have a destination, you don't know how to resource the ship to get to the destination. How much food, fuel, water do you need? So a destination for a ship typically starts wherever you are at one point in time. And the view is that you're going to sail to a port. So for argument's sake, let's say we are sailing from Durban to Hong Kong. You measure the journey. You see it's going to take 10 days of sailing. You resource the ship with 13, 14 days of food, fuel, and water, and you set sail. The next thing a ship needs is, because a ship is quite complicated, it's complicated in that you have a team that operates the forward cranes, the aft cranes. You have a team above decks, below decks. You have a team that operates the helicopters. There are many, many different teams that need to work as one in order for the journey to be safe. Because our brains as human beings struggle to cope and organize and coordinate more than 5 or 7 variables in a ship, upwards of 30, 33 different variables exist. The way that they organize a ship is that the crew of a ship, based on the function they perform in the ship, all have systems that they operate. And a system is simply a set of activities put into a sequence that gives a measured outcome and can be taught and trained. And when the light is red, everyone in the various areas of the ship know what to do, how to do, when to do it. And when it's green, there's a different system that gets applied across these teams in the ship. And what it allows for is the captain of the ship knows that when he or she presses the red light because there's a big storm ahead, the 33 different parts of the ship all together move to the red system of activities, and those systems are designed to optimize the performance of their function on the ship, but also to ensure that their functions are integrated to create one single experience of sailing through the storm. And that experience is governed by what is best practice, the safe way to sail through storms. The same occurs if it's a green light or if it's the blue light. And in the business, it's no different. We have functions across our businesses. We have marketing to generate leads. We have sales to convert leads. We have supply chain to make sure you're buying right. We have finance to manage the money. We have fulfillment and operations. We have administration and so forth. You have crew across those functions. And the question is, what do those crew do day in and day out? Do you have activities organized into sequences with measured outcomes that can be taught in order for that crew to adopt the function, optimize it, and ensure that it's coordinated to create a single experience in the business itself? Then lastly, as the captains of our ships, we can be in one of two places. You can either be in the engine room, which you can see here as below decks, and the engine room drives the turbines that drive the propellers. And what propellers do is it gives you forward momentum. Think of it as income generation in a business. You need to be there in the beginning always. You need to be there quite often, in fact, especially in the times we face in the environment today. But through your activities over there, through driving the business, you are seeking income generation, income growth. Alternatively, you can put yourself up on the bridge. And the bridge is interesting because the bridge is above decks. It has a 360-degree view. And the job on the bridge is fundamentally different. The job on the bridge is to navigate to the destination you have set for yourself. This is what gets you to Hong Kong. This is what allows you through the instrumentation and your ability to see where the challenges will lie. It allows you to coordinate your team in the best possible manner for the ship to arrive in Hong Kong on day 10, as opposed to day 10, or as opposed to day 11, 12, 13, 14, or as opposed to not arriving at all. The job on the bridge is all about leading, and the job in the engine room is all about doing. No different to a business. And the big question, of course, is how do you split your time? As business owners, as captains of your ship, how much do you have on the bridge to apply time and attention to growth? And how much time do you have in the engine room where you're applying your time and attention to daily, weekly, monthly operating activities? With that said, in 2016, 17, and 18, we had the benefit of running extensive, deep surveys across over 10,000 companies, a third of which were in the US, a third of which were in the UK, and a third of which were in Southern Africa. All of them established. In Rand terms, these are businesses doing upwards of 20 million a year to 500 million a year, but privately owned or in the hands of family businesses. And what was really interesting is we asked them, do you want to grow? And 88% said yes. What stunned me was the fact that 12% said no. And the big question is, well, why would you not want to grow? So we asked them. And what we learned is that many of them had bad experiences with growth. For example, every time they grew, what they found is complexity increased. Every time they grew, they were pulled back into their engine room, literally 24/7, dealing with issues and fires in suppliers and customers and the team. What they found is that growth never yielded a satisfactory outcome. Very often, the growth in revenue never yielded a different growth in the profitability of the business. In other words, the relationship between revenue and costs remained constant. So although they grew their revenues, they weren't becoming more profitable. They grew the quantum of profit, but not the profitability of the business. And that is a very clear indicator that growth without scale first is a big error, a big mistake. Scale effectively means you have built a chassis to the business, a platform to the business, that when you grow, you're able to increase your profitability too. In the remaining businesses that we spoke to, we identified a series of constraints, which I'm going to put into themes. Leading from the bridge, what a lot of the business owners were struggling with is, how do you respond to a constantly changing environment? How do you set one destination for the business, one strategy going in one destination, and ensure year on year, everything you do builds momentum to increase the opportunity of reaching that destination? The next issue that came about is most people by far found that their time and attention was more consumed in the daily, weekly, monthly operational activities that the business demanded of them. They were dealing with people issues, they were dealing with supply issues, customer issues, they were dealing with all sorts of challenges. And they found that with their time and attention in daily, weekly operations, little time and attention could be spent focusing on growth. And then finally, the issues were around control. How do you effectively delegate in order to release yourself from daily, weekly, monthly operational activities? And how do you delegate in a way that you don't expose the business to risk? As business owners, the buck stops with you. When you allocate budgets to delegated authorities, how do you get that right? And how do you ensure that decisions aren't taken that expose you to more risk or expose you to unnecessary costs? And the process of delegation is without a doubt one of the single biggest challenges that we all face. When you have a strategy, how do you delegate the strategy in a manner that it actually reaches the ground, that it doesn't rely on you coming back into the team in order to implement the strategy? When it comes to operating in the engine room, there were big issues around sales and marketing. How do we find new clients? How do we engage those clients? How do we onboard the clients? Right across the sphere, digital marketing is proving to be exceedingly costly for the value it yields. It's changed over time. How do we actually find new clients? Where do we go for these clients? How do we understand them with a view to onboard them? And when we do engage with those clients, how do I convey, translate, and enable my team to effectively market and my team to effectively onboard and sell to clients without requiring my exact hand in the business each and every time? When it came to fulfillment, how do we grow without chaos? And if you think about what fulfillment is, it's the operating activities that govern how you deliver your promises. Once you have found clients, once you've engaged clients, once you have built confidence and trust in them, once they have decided to come on board to be serviced by you, how do you deliver the service aligned to their expectations each and every time without fail? And how do you get that absolutely consistent? Because if you onboard a client and you don't fulfill the expectations that were set in the sales and marketing engagements, it is the surest way to destroy brand. You know, across the board and in popular media, there's always this implication that brands are built through how you market and sell. I fundamentally believe that brands are built in how you fulfill and service. And then the last issue, of course, is how do you build a team? How do you get the right people to do the right thing at the right time? And ladies and gentlemen, I can promise you one thing. This is a challenge right across the board. It's not a South Africa thing. It's not a Namibian thing. We all think and feel that the countries we operate in have a skills shortage or a skills crisis. I can promise you it's being felt right across the board. And I'll give you one or two interesting insights. In July this year, in the United Kingdom, there were 1.4 million jobs advertised. 1.4 million jobs. Business is screaming out saying, we need 1.4 million people to support and sustain the businesses we have in order for us to then further grow. Demographically, the number of school and university leavers in the United Kingdom in September reached 350,000 people. So 1.1 million jobs could not be filled. Over 3 million people are ill and aren't able to work, as long COVID has taken a grip over here. And a number of people have retired early because the tax structures that government has put in place has disincentivized people to work. Because of Brexit, they aren't able to find resources out of Central Europe, which is where many of these positions were filled. It's a crisis. Across the United States, there is a resounding, single, consistent complaint. We can't grow, And the reason we can't grow is because we can't find the warm bodies to fill the positions that growth requires in the business. It is everywhere. Question then is, how do you grow without having to depend deeply and profoundly on extensive, high skill sets? And how do you grow with the team that you have to make them purposeful, keep them on point, raise their skill levels, and give them the autonomy to do what they need to do in order to support the growth in the business? Across the 10,000 businesses, here's an interesting stat. 95.5% of the employees in those businesses, on closer investigation and closer discussion, weren't even aware of the company's growth strategy. And it's no wonder that very often business owners I certainly meet with complain about their teams, saying, we employ people, but we are left to do all the heavy lifting. We are left to do all the thinking. And the irony is, in my experience, every time we have engaged our teams on the growth plan and growth path, some of the smartest ideas to get to that destination have come from people closest to the ground. Food for thought. The last three things that were raised, there were big issues around how you grow revenue and profitability. If you have a revenue of, let's say, 100 million Rand, and you have profit of 10%, producing a 10 million Rand a year profit, growing your revenue to 200 million Rand, whilst growing your profit at 10% to 20 million Rand, yes, it's exciting because the quantum of profits there, but what it also indicates is that the complexity that you face in a 100 million Rand business now is double the complexity in a 200 million Rand business. The idea around profitability is to go from 100 million to 200 million, but to increase the profitability from 10% to 12, 13, 14, 15% as you grow over that period. And we're going to talk to a method of getting that right. Second to last, one of the big issues that was raised is, how do I know that what I have is an asset? If you think of what an asset is something that when you acquire it, think of any share on the stock exchange. You pay 100 Rand for a share. Over a period of 5 years, you hope to get dividends, let's say 20 Rand a year. That's income growth. And in our businesses, that comes by growing revenue. It's shown by way of salaries or dividends or bonuses. It's shown by the improvement in performance measures, yielding incentives and bonuses for your team. Income growth is a feature of an asset. The second feature of an asset is that 3-5 years down the line, when you sell that asset, you bought it for 100 Rand, you want to sell it for 200 Rand. That is the capital value of the asset. You hope in your business to improve its capital value year on year on year. And can I ask, just by show of hands, how many people here believe and hope and are absolutely committed to the notion that whilst you invest in your businesses month on month on month, year on year on year, there will be an eventual payday. And that payday sits sometime in the future, and that payday will come from you realizing through the exit of your business a capital gain. I'm sure most. Exactly, Anthony. You wouldn't be in business otherwise. Exactly, Peter. It's there. It's there. This idea that we will, of a day, secure the retirement value and legacy of the business through a capital exit is fundamental to business growth. The third thing you need in order to get that done is that when you go to market with that share, someone needs to buy it from you. It needs to be tradable. If it can't be bought, you can't realize the capital value. And it's for that reason that across the world, on average, 94.6% of businesses start to close. They simply fail to sell because they weren't built into this asset status. And we're going to talk through that now. The last thing, of course, is we are all good at generating income. We're all good at operating businesses to grow. But the fact of the matter is that the way a business needs to be built to be sold is different to the way it needs to be built to simply generate income. From an Aurik point of view, we are firm believers that you should have your cake and eat it. We fundamentally believe that all 9 of these issues can be resolved through two things. The first thing is adopting the right attitude and absolutely believing that you can have your cake and eat it. And at the same time, architecting, building, designing, constructing the shape of the business, the model against which you operate the business, the platform, the chassis that creates the gears for finding clients, the gears for onboarding through sales, new clients, the gears for fulfilling your promises, and the gears for retaining clients. If we look at that commercial system, it's a single system that, if built right, will allow you to put more time and attention on finding new growth, as opposed to time and attention in operating and supporting the daily, weekly, monthly operations of the business. It's also the model that, if structure determines behavior, will enable your team to lead and drive the business in order to release that time that you need to focus on your growth. I'm going to bring it to life for you through an analogy. And the reason that I'm going to use the case study of a baker is because this particular baker is an interesting story. It was one of our first clients at Aurik about 16 years back. And it was a business that was involved in 4 different parts of the baking sector. They were involved in business to consumer activities. This individual was one of the first individuals to join together coffee shops and bakeries to create these coffee shop bakeries that we see around the world now today. And he had 4 such instances. He also was involved in distribution, bringing in about 20 tons of flour a week into big silos and packaging them into 50, 25 kilogram bags, doing flour distribution to smaller competitors. He was also involved in business services, in that he was supplying fresh baked goods into the hotels for continental breakfast. And finally, he was also involved in installations. He had secured the McAdams Baking System franchise for Southern Africa. It's a Dutch brand of plant and equipment that's used to create bakeries, the ovens, the provers, the mixers, and it's absolutely fail-safe. And he was selling and installing these across the various supermarkets, some of the restaurants, and some of the hotels who needed to have fresh baked goods on a daily basis. What matters over here are the principles, which I hope to highlight, around how he changed his business to achieve the outcome that he enjoys today. And these principles are universal principles. The way that you position a business, in other words, the way that you compete, the way that you find new clients, in other words, the way that you market, the way that you engage clients to come on board, to become customers, in other words, the way that you sell, the way that you operate the business, which is how you fulfill your promises, and the way that you organize your administration, team, and finance, which is centered around how you retain your clients, occurs across any business. It differs from business to business based on the personalities in the business. It'll chop and change ever so slightly based on the industry you're in, and it'll differ quite substantially based on your ambitions. But the principles are universal. And then the final thing that really matters in this case study is what I'll be sharing with you is a process of transformation. The business he has today has taken 17 years to build from the business he had 17 years back. It didn't occur overnight. And at any point in time, he was doing 2 things. He was running the business that he had when we met with him. And at the same time, he was building the new shape to the business, which I'll be sharing with you. With that said, he was 54 years of age, 17 years back when we met. He had been operating his business for 25 years. Prior to that, he had worked in corporate bakeries to get some good experience. He was a diversified industrial baker, as I mentioned. And 17 years ago, he was doing a revenue of just on 60 million rands a year, with a pre-tax profit of around 11%. He was hurtful, he was finished, he was exhausted. And the reason he had come to see us at that point in time is he was attempting to sell his business. And when I asked him, why are you looking to exit? Because 54 is young to exit. He turned around and he said, I'm a 4th generation baker. It's been in our blood for generations. I used to love the industry, but he says every day just feels like a grind. And what he described was this notion of being in the engine room day in and day out, and it was relentless. And I said to him, look, we are not business brokers. Why are you coming to us? And he said, well, I tried to sell the business, and the best valuation I could get after 25 years of sacrifice and investment was 22 million rand. It simply will not suffice for my future or my second career. 22 million rand 17 years ago wasn't a bad offer, I didn't think. You know, it had real value. But I suppose after 25 years, he had felt that it just simply wasn't sufficient. In any event, what we then agreed was to work together. And over a 17-year period, we've worked on and off for periods of 2 years apiece. And the outcome of the business today, as it sits, he's turning 17 years next year, 72 years old next year. The revenue sits at around 1.28 billion rand. Profitability has increased almost double, in fact, just slightly over double to 23%. And the most recent valuation that was done on the business is pegging it at around 2.5 billion rand. And ladies and gentlemen, I want to make something very, very clear here. This individual there's nothing special about him. With respect. Yeah, he's impossible like most of you, otherwise you wouldn't be in business. He is driven and ambitious. He suffers from a great deal of idealism and optimism. He has certain perfection issues because he wants things done in a certain way. He carries a tremendous amount of pride around what he has produced. But there's nothing special about him. He never came from a particularly wealthy family. He has an average IQ. And the big question is how? From start to 25 years down the line, 58 million rand. And then over the last 17 years, from 58 million to 1.28 billion rand. And that's the story I'm going to share with you to bring these principles to life. And once I've shared it with you, I'm going to open up the floor for discussion and engagement. And once we've had discussion and engagement, I'm going to go back to the process that he's going through now so we can get our heads wrapped around the investor mindset. With that, the approach that we certainly took was a discussion with him to say you can't be all things to all people, because the moment you are, how do you define what makes you special? And the single biggest challenge that we need to get right is recognizing that we all live, operate, and trade in a very, very competitive environment. And we all operate and trade in markets that are increasingly slowing down. South Africa has been in a regressive environment now for the last, 15 odd years. Inflation persists and things just get tougher every year. The currency is depreciated. So how do you stand apart? Because if you can stand apart, you then have the opportunity to effectively market, sell, and onboard clients. In his particular instance, what he had opted to do was to make a decision to focus specifically on the hotel sector. And he had decided, out of the 3 areas he was involved in, installation of ovens, retailing of coffees and baked good confectionaries, distribution of flour, or business services, supplying hotels with continental breakfast, that would be the direction he would start focusing on to get this right. Positioning needs to answer 2 questions. The first question that it answers is, what problem do I solve as a business through my product or my service? What problem do I solve? And you can't answer that question if you don't know who you solve a problem for. It means you need to know who is my customer. And a customer needs to be defined succinctly, clearly, and narrowly, because the extent to which you can get that right means you can start understanding how a problem for that customer comes about, that you have a product or service that can be a solution to the problem they have. You can understand what the cost of the problem is if it's not solved, and you can understand how to design your product or service to solve the problem, but also to price it at the right cost so that in getting the problem solved, your customer or client still has value on the table. If you're trying to be all things to all people, where do you even begin to understand that exact experience? The next thing that positioning solves is it says, what is the ideal experience my customer wants from me in order to choose me as their preferred supplier? And that means, how does that customer buy? What matters to them? Who's involved in the buying process? How do they want to be marketed to in order to learn about my offer? When they engage with me, what is the process that they need to go through to build trust and confidence that we are the right providers of the product or service? Sales. Once they've been through that, what is the process and experience they want in having their problem fulfilled and solved through us providing a product or service, operations? And then what is the administrative environment I need to create for them in order for them to be retained through a great experience? In his instance, it was impossible to do in the early stages, selling baking systems to supermarkets and restaurants, selling fresh baked goods to hotels, trying to service impossible people like you and me in their coffee shop confectionery stores, and then trying to deal with the grumpiness of smaller bakeries, complaining about the quality of the flour and running massive debtor books. His business stood for nothing. He opted to then go the route of the hotels. And what he discovered over there is that the way he had been selling to these large organizations was wrong. He was told that he needed to go to the food and beverage manager and specifically talk to the food and beverage manager around the continental breakfast that he would provide by means of fresh baked goods. He discovered later that the food and beverage manager was only one party involved in the decision. And through that, he learned that the finance manager also weighed in. Finance wasn't interested in the quality of the product, the croissant. Finance was interested in the price gains and benefits that should they onboard him as a supplier, they could enjoy through his economy of scale. And after that, he then learned that procurement weighed in as well. And procurement wasn't interested in price. It wasn't interested in quality. It was interested in governance and compliance. These very large hotel groups had made certain commitments to the UNDP 10 developmental goals. They had all signed up to a whole lot of ESG ratings. They had made commitments towards climate change requirements. And procurement went deep into the recipes, the supply chains for fair trade, and understanding what the occupational safety and health environment was within this large bakery. So he had learned, in fact, that to position his business to win and compete, he had to redefine it as a business that is a general industrialized bakery, providing what he believed were the best croissants in town, and redefine it into a 365-day-a-year on-border of fresh baked goods, in this instance to the hotel industry, that solves the problem of a continental breakfast 365 days of the year, with the view that it would be bought by three vested interests who were food and beverage on quality, finance on cost, and procurement on governance and regulatory compliance. So he created three new languages. And through that, he was able to resonate, build the confidence and trust of the three parties involved in the buying process. And he was able to crisply define who his customer was, what problem they had continental breakfast, and how, in doing what he does, he could get that problem solved. With that, it created a blueprint against which he was now going to build the business. And the process of building the business is where the system of delivery comes on board. If you think about what systems are, a system really is a set of activities or procedures or policies that govern the behavior of a team who, for example, in this instance, might be doing the marketing. The way he marketed before is he turned around and said, we have the best croissants in town. to create the best client experience for you in the hotel sector. And with that, he was hoping to receive interest, engagement, and inquiry. The way he now marketed is he built a list of 50 hotels. He identified the food and beverage manager, finance manager, and procurement manager in each of the 50 hotels. He then crafted communications by way of email, talking to the key performance indicators that kept the food and beverage manager in their job and earned them their bonus, the key performance indicators that kept finance in their job and earned them their bonus, the key performance indicators for procurement, and he positioned it as a 365-day-a-year onboarding of continental breakfasts, but using the language of those three buying interests. Activities in a sequence that gave a measured outcome. 50 hotels, 150 emails with specific content for each of the parties every month, yielding X number of inquiries a month. And in doing so, he had created a marketing system that could be taught and transferred from him to his team leaders, releasing time to then focus on how to create the sales system that when inquiries came from procurement or finance, or in this case, food and beverage, he had a story made up of activities in a sequence to build trust and confidence and resonance with that particular party to give a measured outcome, which was a deal done. And having built that sales system, he was able to then capacitate his team to drive the sales system. And so on it goes to fulfillment, administration, and retention. The system of delivery creates the chassis of the business. It wraps itself around the product or service you have to take the business to market in a manner that yields an absolutely consistent, reliable client experience. If it's not designed, if it's not built, and you hope through prayer and fantasy that it occurs each and every time, the result of that is that it pulls you back into the engine room 24/7 in order to ensure that that client experience is always a good one. Systems ensure certainty, predictability, and systems built in this manner ensure the capacity and ability of a team to drive those systems, releasing your time to focus on other things. What was absolutely fundamental is that these business systems were built with his team. Already as an established business, he had people in marketing, he had people in sales, he had people in fulfillment and operations, administration, finance, human resources. Every single system that got built, every single set of activities that got built were co-created between himself and his team. And the reason that is so important is because I can promise you your team are closer to the coalface of everyday business than you are. They see what's working and what's not. They were able to lend voice and add value. Remember the earlier stat? 95.4% of people employed in the 10,000 businesses had no idea what the growth strategy was. They weren't included in it. If you work with your team and your team know what destination you're sailing to, and they have the ability to weigh in, add value, lend voice, and become co-creators of how you're going to build the marketing system, the sales system, the operating system, the administrative system. It means that they see value in themselves beyond just the function of work. And most importantly, because they're co-creators of it, they become co-owners of it. And when you become a co-owner of a system, you become accountable for the performance of that system. It is the smartest and fastest way to turn strategy into action on the ground. And with that job done, he had achieved 3 outcomes. The first thing he had achieved is he had built a scalable platform. A scalable platform is where you have a business operating system that governs all your commercial activities, led, managed, and driven by a team that knows what to do, when to do, and how to do it, if you recall the ship analogy, and that requires no more than 30% of your time to sit, support, coach, mentor, and help the team perform in the way that they need to perform. It also yields organic growth. So if your growth rate that should set for organic growth sits at around 15%, in order to accommodate inflation, in order to accommodate currency depreciation, and in order to accommodate the very slow growth economy we're in. To maintain what you have, you need a 15% annual growth. That growth should be able to be delivered, not requiring more than 30% of your time. If you have gotten that right, you effectively have built the chassis or the platform for growth. It released 70% of his time, and with the 70% of time, he then focused on two things: accelerated growth and next level growth. Accelerated growth is when he got the formula right for the hotels, providing the continental breakfasts. He then ramped up his marketing into the hotels. He saw that he had found resonance with how hotels behave and buy. He found that he had a proper solution to the problem they had of 365 days a year onboarding fresh baked goods. And in doing so, he was getting a higher and higher performance on his marketing, sales, fulfillment, and services to hotels. His competitors were competing and knocking on the door, but they were offering a better croissant as opposed to an absolutely consistent, reliable 365 days a year onboarding of continental fresh baked goods breakfast. The second thing that he spent his time on was finding a new market segment. And the trick and the key to this was ensuring in finding a new market segment, he was solving a very similar problem for a very similar need. And where did he find it? He found it in supermarkets. Supermarkets break even on the 26th of every month. They rely on 3 trades in the day: a morning trade, an afternoon trade, and an evening trade. The morning trade is absolutely premised on fresh baked goods being available. He found in supermarkets, when speaking to them, that their Monday morning trades were poor because the Monday morning bakery outcome was poor. And the bakers, he understood, had been watching too much football and drinking too many beers on the Sunday. Genuinely, from the mouths of supermarket owners to him. He put a proposition to them that he could replace those bakeries, the space that the bakery took up, and the bakers, by providing a 365-day-a-year onboarding of fresh baked goods for morning trade. And in doing so, he got rid of cost, and he was able to release the space that the bakery took up for additional shelving space in order for more products to go onto the shelves, and in doing so, increase the share of revenue per shopper visiting the supermarket. Similar problem from a positioning point of view, very, very similar, with only small adjustments in the system of delivery, and something that his team, who had become so adept at servicing 365-day-a-year onboarding of fresh baked goods for continental breakfast, could easily adapt to on a 365-day-a-year onboarding of fresh baked goods to supermarkets. And with that, he yielded 2 growth outcomes: accelerated growth and next level growth. And I'm going to show you what it did to his profitability. With that, it obviously released more time. And with that time that was released, it allowed him to focus constantly on navigating the business to the destination, as opposed to being daily, weekly, monthly involved in operations. The other thing it allowed him to do is to start focusing on the 5 levers of valuation. I'm going to get into those straight after explaining the growth strategy that he went through. So we have money on the right or left, and we have time at the bottom. When we first met with Jack, he was involved in anything and everything, and that's what his business looked like. He had grown the business quite successfully. He had found himself plateauing growth, and he was on this kind of bumpy ride, kind of moving sideways. The growth was there from occasion to occasion. The costs were pretty sticky, and profitability wasn't moving. And I refer to that as bank balance growth. Because he started the business and he started it undercapitalized, for the first 10, 15 years, all he focused on was the bank balance, ensuring there was enough cash in the business for the following months. And he had developed some bad habits around it. Looking at your bank balance is not a growth strategy. In the first piece of work we did together, which is where we started to orientate the business towards the hotel sector, we got to a place and a space where he positioned effectively, built a system of delivery, and got his team on board to drive the systems. It stabilized his revenue growth into the hotel sector, and it also began to stabilize his costs. But at this point in time, there was no increase in profitability. With the time that it released for him to then focus on accelerated growth, again, he was able to deepen his market share of the hotel sector, but there was no noticeable difference, only ever slight increase in profitability. Once he had gained market share in the hotel sector and then adopted a next level growth strategy by introducing a new seam of revenue from a completely new industry into a business model that had been built to service hotels, solving similar problems in the supermarkets, that's what happened with his cost structure. There was a marginal increase in costs, but a significant increase in revenues. And then finally, where he is now, is he's entered into the franchise environment, where he supplies fresh baked goods to franchisees that require 365 days a year fresh baked goods, solving a similar problem to that of the supermarkets, which is a similar problem to that of the hotels. And he had crafted and built an underlying business model to specifically get that job done right at an efficient level, led by a team that focuses on getting that job done and only that job done right, allowing momentum to be built year on year on year into 3 well-defined, significant market segments. It's a simplified business yielding that outcome for him. I'm going to take a 5-minute break and switch off the presentation to field a few questions. Any thoughts? Are we clear on all those elements? Alistair, I can see you smiling. You want a triple turnover and you want succession. And you need succession. A business should last way beyond the lives of all of us. Getting succession right is tricky. It's always tricky. And one of the most fundamental things to get it right is to have a simplified business. If a business relies on you and your technical expertise and relationships, it makes transferring that business to the next generation of leaders very, very hard. But if a business is constructed to solve a very well-defined problem for a well-defined group or a couple of segments, in other words, it mechanically gets the job done, and you're able to empower a team to drive and lead the mechanics of the business, the systems that drive the business, it is the early stage of transferring responsibilities, whether that be management or leadership responsibilities, to the next generation, whether it be family or your leadership team. No questions. Can I move on? Can I put money to all of this now? Okay. Right, so let's put some money to this. Because without the money, there is no honey. And it's all a lovely theory if it doesn't translate into value. What's your number? Just by show of hands, does everyone have a number for their business? Do you have an idea of what you hope in 10, 15, 20 years' time the exit value of your business would be? You do. Good. Murray's got a number in mind. Derek, you got a good number. Philippa, you don't have a number. Justin, have you got a number? Is the number the destination? Because otherwise, how do you define the destination if you don't have a number? Stefan, have you got a number?
That me? No, do not
Yeah,
yet.
not yet.
Mm-mm. No, you still have
But
to figure
yes,
out how to sell this place first.
well, you need a number. A number's a good thing to have. It gives you something to aim for. You know, when you're navigating a ship and you go into a destination and you're out at sea and you have no land symbols against which to see where you are, you're using a GPS. And that GPS gives you your coordinates. You mark a little X on this big blue map because there's nothing else. And what you're hoping for is that the X's start shaping out the journey towards the destination. It helps you ensure that you're heading in the right direction. That all the momentum behind what you do daily, weekly, monthly in the engine room is taking you to a destination. So let's just talk a little bit how these numbers work. Stefan? Question? Not? Okay. All right, so let's talk about how it works. And don't be angry with me. This is not my fault. What I'm about to share with you is not my fault. Through no fault of yours or mine, the way that a business gets valued in Southern Africa, which is slightly different to the way it gets valued in developed economies, only slightly different, is that you get a multiple of profits applied to your business. And in Southern Africa, that multiple starts at 3. So whatever your pre-tax profit is, multiply that by 3, and that's the value you can hope to get for your business. Now, if you have a business that has lots of inventory, or big plant and equipment, or many vehicles, you might look at that number and say, no, the assets in my business, the physical assets in my business are worth more than that. Okay, it's a fair point. So the way to then value your business is to phone up an auctioneer and say, what could you get for all the stuff in my business? And if you have stock in your business, the auctioneer will turn on and say, well, Jack, I think we can get 80 cents in the rand for all stock that's less than 2 months old. We'll get 40 cents in the rand for all stock that's between 2 and 4 months old. And we'll get 10 cents for all stock after that. Regarding your vehicles, we'll get the auction value. Regarding your plant and equipment, we'll see if we can get more on an auction or more for the scrap value. And as brutal as it sounds, that's where we are at. That's called the net realizable value of the company. If the profit number times 3 is not satisfactory, that's the second option, to look at the net realizable value of the business. It's a brutal, brutal process. And the fact that you might have a very, very expensive AI-driven tractor that you paid 30 million rand for, its value is only that which you can yield through the profit it generates or its scrap value. If that doesn't work for you, there's a third option. And the third option is to turn on and say, Pavlo, you know what? You're being very cruel and unfair. And in fact, my business has far more value in it than you actually can see. For example, over the next 3 years, I will be able to generate profits of X, Y, and Z. Despite the fact that I haven't generated that in the past, that's the potential that lies in my business. And then what we would do is we would value your business on you delivering those profits in year 1, 2, 3 ahead. But we will do so only after I've acquired the business, I own the shares in the business, and I control the finance, I control HR, I control the marketing activities, because that's what a new owner does. So you're left then having to deliver the profits to earn out the payment for the business in circumstances that are very, very different to the ones that you have traditionally been used to, in which you have full autonomy to drive out the future of that business. I've been involved in 86 such transactions. I was on the side of the acquirer through no fault of mine, yours, or anyone else's. And I was never once able to see an earnout fully appreciate itself. It is designed to erode value for the acquirer, for the seller. The acquirer always wins in that environment. So if you're looking to exit, the cleanest way to exit is to build the business in such a fashion that you can get a clean deal done at a premium valuation with only a 6-month period that you would remain on board for in order to ensure the final transfer of all responsibilities. Alternatively, if you're going to be exiting and you're going to be exiting to your leadership team, that process in its own right typically takes between 5 to 6 years. Firstly, you have to get your team on board around the fact that they're going to move from becoming employees into business owners. Secondly, you have to then start transferring responsibility of all leadership, management, and control mechanisms, which typically takes around 2 years. And then thirdly, you need to remain on board, as do they, with a view to then have the business pay you out for the shares that they would then own, and can't afford to acquire. So exiting through succession is a long-term gig. Exiting through a third party is a 3-year gig. So going back to it, the average valuation sits at 3 times multiple of profits before tax. It varies ever so slightly from industry to industry, location to location, and on size of business. But that's classically the starting point. So mathematically, if you're producing a 5 million profit, are there any accountants on the screen? Yes, Stefan, what's our starting valuation? Ha ha ha.
Oh, you don't need to be an accountant to get that.
You don't need to be an accountant. Absolutely. If you got through schooling, you're going to figure out very quickly it's a 15 million rand price tag. Then the process of discussion and negotiation begins. My job as the acquirer would be to diminish the value from 15 million down. Your job as the seller is going to be to improve the value from 15 million up. And if we go back to the case study of Jack the Baker, because during the course of next year, he's looking to exit his business. This is how the process works. The acquirer, before coming to meet with you, has gone and spoken to 3 or 4 of your competitors. But in doing so, they have the opportunity to learn about the industry and about what the competitive environment looks like. They also have the opportunity to be able to understand what questions to ask in order to measure you against your acquirer. And the first set of questions they classically ask is, what makes you special? In Jack's case, there are over 8,500 registered bakeries. They have visited 5, 10, 15 bakeries before visiting Jack. And when they visited those other bakeries, what do you think those bakers said sets them apart from all the other bakers? A best guess. Matthias?
Quality of their products.
We have the best croissants. We have the best croissants. We have the best product. We have got the best product. All of them said that. When Jack was asked the question, he turns around and he says to me, I think you've made a mistake. Why, Jack? He says, we're not in the baking industry. I said, well, what is your business? He says, we're in the 365-day onboarding of fresh baked goods industry. And in doing so, he has completely now taken control over me understanding his asset versus that of the remaining 8,499 registered bakeries in the country. He's able to show that his clients see that problem as something he solves for them. He's able to show the inroads he's made into the hospitality hotel sector through real numbers and client growth in acquisition and market share, into supermarkets and into franchise outfits. And that gives evidence to the fact that he, in fact, is more than just a baker. He has created a business that solves a well-defined problem for a well-defined segment of customers. They're responding to it, they appreciate it, they're buying it because he has increased his market share in those three segments in the last 3, 4, 5 years, as opposed to simply saying, my product is better, my price is better, my service is better. And with that, he earns an additional multiple. Simply getting that argument right, he now distinguishes himself from his competitors. The next question I ask is, how does the whole thing work? And to the extent that he can show me an operating playbook, an operating system governed by activities in sequence with measured outcomes that are trainable, that are teachable, that are measurable, that he can put performance criteria to, that he can create job descriptions to, and that the individuals running it are able to perform against. In showing me the playbook, he answers the question, how does the whole thing work? The next question I ask is, well, who does it? If it's not you, Jack, who does it? And to the extent that he can show he has a team that runs, leads, drives, owns, and innovates the underlying systems that yield his distinctive positioning in a competitive marketplace, I'm already starting to see now the independence of the business. In other words, he is less likely to be required in the business. And in fact, the system of how the business is built to capture that market through the team on board is in fact the asset I'm acquiring. I then ask the question, is there growth ahead? And to the extent that he can show in the last 3 years there's been growth in revenue, but also an increase in profitability. I use the last 3 years to forecast the growth ahead. And if I see that there was growth in the last 3 years, there will be growth ahead. He earns an additional multiple. And then finally, on close inspection with the final due diligence, I do a deep dive in understanding who his 3 big suppliers are, who his 3 big customers are. And when I speak to them, I ask about their relationship to Jack. And if I can see that Jack is integral to those 3 relationships, it means that Jack is still required for the business to sustain itself. However, if he has done his succession successfully, and those relationships have been effectively passed on to the leadership team, and I can see that Jack is not necessary in the business, he earns the final multiple. So the same business that today would be valued at 15 million rand could be, if built and organized and arranged and led differently, valued at 40 million rand. Through no fault of yours or ours, getting these arguments wrong is what led to the opportunity I enjoyed at the age of 22, acquiring a business for R1 and taking on the debt. Through no fault of yours or mine, we start at a 3 multiple. And through how we apply our time and attention, and in how we build and lead the business, we either scaling up the asset stack, or we are eroding the value of our business by being square and center of its existence. And with that, I'm going to move towards closing out. The way that we typically engage is we meet as a team, should we wish to meet with each other, and should you see value meeting with us. We like to understand where you want to be in the next 3 to 5 years. Once we've understood that, if we believe we can partner with you in order to deliver that outcome, we give you a partnership proposal. We act as partners. We behave as partners. 70% of our fees are based on your growth. We don't work with companies we can't grow, and we don't work with companies where we can't deliver growth as a result of that. We then have an InvestCom environment in which we meet with our broader team to confirm what your ambitions are in the next 3 to 5 years, and then to further confirm in doing what we do and how we do it, we're able to deliver on that expectation. And if we believe we can and you believe we can, we simply proceed and work together in order to get it done. I want to end up with 2 last thoughts. For all of us, we need to be driven both by purpose and intent. Purpose speaks to the operating mindset. It's absolutely essential that you apply your time and attention on constructing a business that is able to deliver the outcome you want the business to deliver. It's essential that you love what you do, and it's essential that you make a difference in what you do, because that love, that care, that purpose is what keeps us at the helm every day. At the same time, we must adopt an investor mindset. And the investor mindset is have the courage to set a destination. Do it over 3 to 5 years. It doesn't mean if you put a price tag on the business that you're expected to sell it. Jack came on board with us 17 years ago looking to exit the business. Only now, 17 years on, is he thinking again of doing the final exit. But if you build a business to always have a maximized value, it means that you have built a business to have a maximized operating performance. And it's for that reason that I fundamentally believe you can have your cake and eat it. And with that, I'm going to end, share a few more thoughts around where you can get some access to additional content, but we'll send this to you in any event in an email thanking you for your time and attendance with us. And in closing off, are there any last thoughts, remaining thoughts, comments, considerations? None. Daniel, are you on board? You look solid. Philippa, yes.
Does Aurik have a sweet spot in which you operate in terms of size of business?
Yes, we do. We do. We eat our own breakfast, and it's a really good question. You can't be all things to all people. And what we do is we focus very specifically on companies that are privately owned, either through an individual or partners or a family. So we're good at working with privately owned businesses. We typically start at around 15, 20 odd million rands worth of revenue, going up to 300-400 million rands worth of revenue. We have a few clients that are smaller than that, a few clients that are larger than that. And then we work with companies where the growth mindset, the mindset of the business owners is orientated around growth. And at the same time is a mindset that says, I want to grow with my team as opposed to growing independently. And the reason that matters to us, Philippa, is because in any work we do with any of our clients, we work with you and your team to help get the team orientated around the future growth, to help have their voice heard, and to help have them do the heavy lifting of building the systems alongside you, so that once the systems are built, they have the independence to be able to operate them, release your time for us to then focus on growth. So that gives us, that's why we have so much pre-engagement before actually getting involved as a partner in the business. Alan?
Yeah, I had a question, maybe a little bit to play on your analogy with the baker. And he's got multiple opportunities, and he had to make the difficult decision of turning down 3 of those opportunities and focusing on one. So maybe, do you have a rule of thumb or an insight into what are the kinds of things we would be looking for if we were to down select and choose not to take opportunities?
You know, it's so interesting. And Gary Baker, who's on the screen, was part of an event yesterday that we had in the UK. And one of the businesses over there is a big supplier into the supermarket environment. They supply non-perishables, and they do about 700 million a year in revenue. And they had just onboarded a new head of product who comes out of Tesco, which is one of the biggest supermarkets in the world. And she made such an insightful comment. And she turned around and she said, having heard what you've had to share with us today, probably the hardest decision any business owner needs to make is to learn how to say no to anything that's not core. And if I look at the industry you're in, and can we just talk a little bit about it? Because you're in the solar sector, you're in the solar industry. It's booming at the moment across Southern Africa. It's going to start booming in Europe as well. The early stages and signs are there. But right now, Alan, you're in a bubble and you're competing with many, many companies that are growing super, super fast. And eventually the market is going to start maturing. It's going to start consolidating. And when it does, the thinking I would have front of mind if I'm in your shoes is thinking that says, we're either going to be the consolidator or we're going to position our business to be acquired. There won't be anything left in between because that's the nature of how all industries mature. Given that, if we're going to be the consolidator, what are we going to ourselves look to acquire and how will we go about doing it? However, if we're going to be the acquired, how are we going to set ourselves apart from the many, many other solar designers, installers, management companies out there that are growing at a furious pace? And if you don't want to be in a position where you're competing, well, we've got access to the best PV cells, or we have access to battery solutions that no one else has, or we have a management system to allow a client to be able to, coordinate and organize their consumption of electricity from various sources more effectively. Because those are the arguments that will be put out across the industry, as opposed to saying, we focused on junior mines, or we focused on privately owned commercial office blocks, or we focused exclusively in A-income residential neighborhoods, or we focused on 2 or 3 segments, and we can demonstrate the value of those segments, and we can demonstrate in the last 3 years how we've made inroads to own those segments. It immediately puts you in a far stronger position to distinguish yourself from, I promise you, my friend, and because you're in the industry, the many, many, many others out there in the same space and place that you're in at the moment. And I would be thinking with that view ahead, with a view to say, I'm going to have everything I have, keep everything I have, but I'm going to start slowly over time shaping the business to be there 3 years from now. I hope that answers the question.
No, it does. Yeah. Thanks so much.
Any other questions? None. Wow. Really? None?
Pablo?
Yes.
Anthony. Just curious in terms of you're across the States, Europe, and Southern Africa. What of those 3 blocks are really your growth sector, and how does South Africa compete within that in terms of businesses that are viable or in a position to upscale and sell themselves off?
I want to talk about 2 things. I'll answer that question, but Anthony, with regard to you, I also want to talk about multi-location stores, because that's going to be a fundamental piece to your growth strategy, if I understand your business correctly. So in developed economies, instead of a 3 multiple, the starting point is typically a 4 multiple. But if you compare like for like business, you will enjoy a higher profit before tax number compared to a similar company in a developed economy. The second part of developed economies is that they're very, very tightly stitched. If you have momentum in Southern Africa, for so long as you harness it and navigate it correctly, as you've seen in the instance of Jack the Baker, you can build a significant business because, respectfully, many of your competitors have got a bank balance growth mindset. There's no strategy in the growth. There is no plan. And we come across many businesses that just simply go month on month or year on year. So the mere fact that you put a plan down, that you create a structure, that you set a destination, in other words, your growth is considered, organized, and thought through with a structural plan to enable it, You can get ahead far faster than you can in the US, the UK, and Europe. The US is the hardest market to get ahead in fast, and yet the easiest at the same time. And it's the hardest because the moment you have a winning formula, you're going to have 300 competitors looking at you who are heavily resourced and are able to move very, very fast in order to imitate what you have. And successful businesses in the US have recognized the following, that to be a decathlete is a loser's game. To be a single discipline athlete is a winner's game. A decathlete thinks over 100 hours, 10 hours on 10 disciplines, whereas a single source athlete, call it the 100-meter sprinter, thinks 100 hours on the 100-meter sprint and only that. So the pace is so aggressive, it is so competitive, it is so cutthroat and vicious that if you don't narrow and focus and become expert at the 2 or 3 segments you're chasing, you're going to get eaten for breakfast. The UK is different in that it is a far softer economy. What we have in South Africa is necessity driving us. In the UK, if your business doesn't succeed, you can still educate your kids, you still get free healthcare, you can get subsidies to survive and exist on a day-to-day basis. Benefits, it's called benefits, things that we aren't familiar with. And you don't have to worry about, all the additional funding required to create safety and security for yourself and your family. And as nice as that sounds, it has not served the performance of businesses across the UK. Necessity is a very, very powerful driver, and I think it's a massive advantage. The UK is also going into a really interesting space. You need to understand that in America and in Europe and in the United Kingdom, there was no inflation and there were no interest rates for the last 10, 15 years. And the fact that that now is there means money is being sucked out of the system, and people have to now start growing in order to maintain a lifestyle. So let's just talk about multi-location stores. We've got clients in South Africa in different industries to you that run multi-location stores. So they've got a facility, call it a big wholesaler. I'll give you an example, that supplies electrical goods that would be bought across industry, either by solar installers or electricians. Alan, you're probably a client of theirs or customer of theirs. You buy the bits and bobs to connect everything together. They've got 4 stores located across the country. And the work they're doing with us is to improve the systems and positioning of the stores in their locations, with the view to improve efficiency and productivity, and with the view to get the staff teams running the stores super efficient and to ensure that their performance is measured. Once they have that formula right, Anthony, they're going to lift and drop it into establishing 2 further new locations in Southern Africa. And once they have got that formula right, they've identified an acquisition in the United Kingdom of a very similar business, supplying almost the exact range of product that they have supply chains and access to, that's in its 4th generation family. And the 4th generation family is running these 38 locations in such a sloppy manner that the opportunity to raise funding, acquire it, and lift and dropped the commercial systems built and incubated in South Africa here into the UK will immediately yield productivity gains that already the funder they're engaging with has placed a value on. And that is their 5-year plan. So what we learn in Southern Africa has value in these markets. But you have to get the golden goose. The goose that lays the golden egg has to be built right to release time and attention for you to focus on new markets and to secure the monthly cash flow that gets eaten up when you enter into hard currency markets. Any other thoughts or questions? Derek, are you enjoying trading in a saturated market?
Yeah, it's a very difficult space for us to be in, and that's hence our conversation. We need to start looking beyond our own borders. Similar to what you've just put out there about a South African retailer who's now looking to purchase offshore. We're having to reconstruct ourselves as to how we can go and start competing in an offshore market. It's very difficult for us here where we sell a service, not a product. It's a completely different world to be in.
So can I just share with everyone what Derek's business does is, in my view, they're one of the leading design agencies across Southern Africa, and they do retail design and brand development and all those things. And all of us have experienced their design by the stores we walk into. What's really interesting is we've got clients, obviously, in the United Kingdom, and there's a service called digital marketing, right? And everyone's worked with some sort of digital agency. And what's really interesting about that service is that on close inspection, what drives that business is your understanding of algorithms that govern the performance of Google and Facebook and LinkedIn, amongst others. And what we've been doing recently is inviting our UK clients to revisit their digital services. Because if the mathematical competence and capability of digital agencies in the United Kingdom is similar to the mathematical competence and capability of digital agencies in South Africa, in other words, the teams in each businesses each understand their algorithms and mathematics, then what distinguishes and sets one apart from the other? And through the process, what a number of our clients in the UK have learned is that it's same, and therefore the only distinguishing difference is price. And the cost of living in the UK is relatively a lot higher than the cost of living in South Africa. And that pricing differential can be anywhere between 20 to 40%. And what's been so interesting, Derek, is seeing clients over here opt to work with South African providers, because if it's purely the mathematics, then let's enjoy the price gain at least. And there's extensive thinking around how to leverage a South African base to gain skills, expertise, and price advantages in the markets over here.
Yeah, I'd be very interested to explore that further with you, because the complex that we come with is we deal in the three-dimensional space as well, the physical trading environment, as well as the sort of digital environment. And it's how to merge those in a cost-efficient way in an offshore world.
Completely. What's interesting is we have an event in London on the 29th. And Gary, we have a design business coming to that event, correct?
Correct. Yeah.
Yeah, and what they do, what's interesting about them, Derek, is I think they specialize specifically in kitchen designs. Okay, so somewhat different to yours. No doubt you include that, but they've got a strong suit in that sector, that space. And what they're struggling with is access to skills at an affordable level, access to fresh thinking and fresh designs at an affordable level. They're looking for points of distinction to compete with many of the others. And what they have started to do recently is broaden beyond kitchens and start moving into shop fitting environments. So once we've delivered that event on the 29th in London, we'll certainly have a discussion with them and see if there's some value in the two of you having a chat.
Yeah, I'd greatly appreciate that. Thank you.
Any other thoughts from anyone? None at all. Good. Well, folks, I hope you got some value from that. We'll be sending an email to you afterwards. Please, won't you do a rating on the talk? I'd really appreciate any feedback on how to improve it. We have migrated almost exclusively now to in-person workshops. They're 3.5 hour workshops where we build out architectural plans, if I'm going to borrow Derek's world, to create a scalable business platform. And we put proper mathematics to it. We encourage the setting of clear destinations, and you walk out with a physical plan on what you need to do Monday morning, 8 o'clock, and how to get your team on board. If you have an opportunity to come to any of those physical events, certainly do. But otherwise, I hope you got some insights and some useful steps that you can take in your own business going forward from lunchtime onwards today. Good.
Thank you.
Thanks all. Very nice to meet you all, and very nice to have met you through your businesses. And please connect on LinkedIn. It'll be great to continue the conversations.
Thank you very much.
And
Awesome.
Matthias, I'm expecting a delivery to Cape Town, a 6-pack delivery to Cape Town, so everyone can sample your brews.
Pavlo, you need to send me an address and I can take you a 6-pack, but I've got a very wide variety of products available. So we need to first determine what's your preference drink, what's your preference style of beer that you would like, yeah.
Yeah, well, I'll be looking to Rolf and Ruan for guidance on that. And Mornay, the three of them are probably better connoisseurs than me. So we'll pick up with you for sure.
Yeah, would like to talk to you after this as well. Thanks.
Fantastic. All right, folks, take care. Have a wonderful day forward. Turn everything that you can from the last hour and a bit into action after lunch. And let's start making things happen together. Cheers all. Bye-bye, Mr. Alan Brown. Nice to see you.